Hello and welcome. In this video, we will answer the question, what is an index? Alright. To help you understand the concept, I will take an example. Now, the date is January 2nd, 2025. This is you and this is your mother. Alright. Your mother asks you to go to the market and buy vegetables. Alright. So what do? You go to the market. In the market, there are shops, a lot of shops, and shops have vegetables. Correct? You have a lot of options to buy from. But you only buy the ones that your mother asked you to. Alright? Now let us say that you buy 1 kg of tomatoes, 1 kg of potatoes, and 1 kg of onion. Alright? And the price of these 3 vegetables per kg is given below. Tomatoes cost 10 rupees per kg, potatoes cost 20 rupees per kg, and onions cost 30 rupees per kg. Alright? Now, you go back to your mother and your mother asks you, what is the price of the vegetables that you bought today? Okay? Now you can say, tomato costs 10 rupees, potatoes cost 20 rupees, and onion costs 30 rupees. Correct? Or you can also say it like this. You can just add up all the values and say, today the vegetables cost 60 rupees. Alright. So you can say individually, or you can sum these three and say, today the vegetables cost 60 rupees. So 10 plus 20 plus 30, 60 rupees. So your mother will come to know that the cost of vegetables on January 2nd is 60 rupees. Alright. Next, on January 3rd, your mother again asks you to bring vegetables. You go to the shop and you buy the same 3 vegetables, and the price has changed today to these. Okay? Tomato today meaning on January 3rd, costs 10 rupees per kg, potato costs 20 rupees per kg, and onion costs 20 rupees per kg. Alright? Now, when you come back home with the vegetables, your mother asks you, what is the price today? What is the price today? And once again, you can say that tomato costs 10 rupees per kg, potatoes costs 20 rupees per kg, onion cost 20 rupees per kg. Or, once again, you can sum this up and you can say, today it is 50 rupees. Alright. So 10 plus 20 plus 20, 50 rupees. You can add up the values and say 50. So your mother comes to know that the value has changed and it is 50 rupees on January 3rd. Alright. And once again on January 4th, your mother asks you to bring vegetables and the same thing repeats. And on January 4th, the price is 70 rupees. Alright. Okay. Now this is what an index is. Alright. Leave out the rupee. Leave out the rupee. Just take this value. Okay. This 70 is an index. Alright. 70 is an index. It gives you an idea of how the price of vegetables is moving. Okay. Now, here is a table. Vegetables in this column, and I have something here in this column and something here in this column. Alright. On January 2nd, 3rd and 4th, the price of vegetables was 60 rupees, 50 rupees and 70 rupees respectively. Correct? Now what I have written here and here are the name of indices. Index is singular, indices is plural. So Nifty 50 is an index. Sensex is an index. Alright, what is an index? I will tell you later. Now let us concentrate about this table only. Okay. The value of Nifty 50 on January 2nd was this much. The value of Nifty 50 on January 3rd was this much. The value of Nifty 50 on January 4th was this much. The value of Sensex on January 2nd was this much. On January 3rd was this much. And on January 4th was this much. Okay. Now looking at these values, your mother comes to know that on January 2nd, it was 60 rupees. And on January 3rd, it has reduced to 50 rupees, which is good in the case of buying vegetables for us consumers. And on January 4th, it has increased to 70. Correct? So your mother comes to know about the price fluctuation or price movement of the vegetables by looking at these values. Similarly, the index here gives you an idea of how the price of something is moving. Okay. Now what is this something? This something is stocks. Alright. Now this index gives you an idea of how the price of stocks in the market is moving. This index also gives you an idea of how the price of the stocks in the market is moving. Alright. So on January 2nd, it was this much. On January 3rd, it reduced to this much. And on January 4th, it increased to this much. So you can see how the price of these stocks are moving. Alright. Now this is what an index is. Index gives you an idea of how the price of stocks is moving. Just like how 60, 50 and 70 gave your mother an idea of how the price of these three vegetables was moving. Alright. Now the Nifty 50 index gives you an idea of how the price of stocks of 50 companies is moving. Okay. And similarly, the Sensex index gives you an idea of how the price of stocks of 30 companies is moving. Alright. Now 50 companies and 30 companies. Where are these companies from? These companies are from NSE and BSE. Okay. So we have learned what stock exchanges are. Correct? Nifty 50 is the index of NSE. Or you can imagine like this. Nifty 50 gives you an idea of how the price of 50 items from the NSE shop is moving. Alright. And in the same way, Sensex gives you an idea of how the price of 30 items from the BSE shop is moving. Alright. I told you that BSE and NSE are shops from where we buy stocks. Correct? So, Sensex gives you an idea of how the price of 30 products from the BSE shop is moving, and Nifty 50 gives you an idea of how the price of 50 products from the NSE shop is moving day by day. Alright. Now, it is just a value. It is just a value. Here, it was rupees. 10 plus 20 plus 30. It was 60 rupees. But when we say value for index, it is just a value and not rupees. Okay. Now, how are these values calculated? Here, I have calculated it by adding the prices of the vegetables. Correct? But here, it is not the same. These values are calculated using a complex formula, I can say, which is not required to know. Alright. So we have a formula to calculate the value of indices, and using that formula we calculate them. Alright. And we track the values. We track these values every day to know where the market is headed. Alright? Yes. Now, these are indices. These are indices from America. This index shows you how the price of 30 companies is moving. This index shows you how the price of 500 companies is moving. This index shows you how the price of 100 companies is moving. Alright? So we track indices instead of individual stocks. Okay? Now, how do you think the index is useful? See, which is easy? Tracking one single value or tracking 30 individual values of 30 companies. Which is easy? Tracking one single value is easy. Correct? So that is why the index is helpful. It gives you an idea of how the price is moving. Okay. Now, just like we have different categories or sectors, we have different indices. All right. We have vegetables, we have fruits, we have meat, and we have a lot others. So if we are interested in vegetables and if we want to see how the price of vegetables is moving, then we track some value. If we want to know how the price of fruits is moving, then we track one more different value. If we are interested in meat and we want to know how the price of meat is moving day by day, then we track a different value. Correct? In the same way, we have different indices categorized according to sectors. All right. Nifty Bank, or as it is famously called as Bank Nifty, is an index which has major banks under it or in it. Or I can say, in other words, Nifty Bank is an index which shows you how the price of stocks of major banks is moving. Okay. Nifty Auto is an index which shows you how the price of stocks of automotive companies is moving. And similarly, this and this. Apart from these, there are many others also, which are categorized according to sectors. So if you are interested in any particular sector, you can look at that particular index value. All right? Yes. I hope you have got the idea of an index. Okay. Now, the question: do indices represent how the economy is doing? Does the index which we are tracking tell us how the economy is doing? Meaning, if the value of an index falls down, does it mean the economy is coming down? Economy of the country? Or if the value of the index moves up, does it mean the economy of the country is doing good? No, it is not like that. The reason is, let me come back to this example once again. You see here, 70 is our index, which gives us the price of these three vegetables only. Correct? Apart from these three vegetables, there are various other vegetables also. And those vegetables are not represented by this index. Correct? So just by saying 70 is the price, we cannot say that the price of all the vegetables has increased. Only the price of these three has increased in their value. Some of the vegetables that are not in these three may have lost their price, or their price might have been reduced. We do not know that. Correct? In the same way, Nifty 50 tracks the price of or prices of 50 companies from NSE, and Sensex tracks the prices of 30 companies from BSE. Correct? And you know that BSE has more than 5,000 companies listed under it, and NSE has more than 2,000 companies listed under it. So, out of those 2,000 companies, the Nifty 50 gives you an idea of how the price of only 50 companies is moving, and Sensex out of 5,000 gives you an idea of how only the price of 30 companies is moving. Alright. So apart from these companies, there are various other companies also which might be doing really good or bad. So if Sensex comes down, meaning the value of Sensex comes down, that doesn't mean that economy is doing good. The other companies other than these 30 companies might be doing good. We do not know that. We have to check them individually. Similarly, if Sensex goes up, that doesn't mean the economy is doing good. What it means is only these 30 companies or some of these 30 companies are doing good, whereas others might be doing bad. We do not know. We have to check them individually to know how they are performing. Alright? So we cannot say that the indices tell us how the economy of a country is doing. Okay? But generally, if the value goes up, then it is good. If the value goes down, it is bad. Alright? Yes. Now, what I want you to do is go to Google and type in the name of the index of your country. Alright? I am from India and Nifty 50 and Sensex are the important indices of my country. And so I will say Nifty 50 and hit enter. Okay. On this day, or I can say today, the value of the Nifty 50 index is this. Okay. Google also gives you a chart which shows you how the price of the index moved in 1 day, 5 days, a month, and a few others. Okay. I will say Sensex and hit enter. And on this day, the value of Sensex is this. Okay. If you are from a different country, you can type in the name of the index of your country. For example, if you are from America, you can say Dow Jones and hit enter. And it will give you the value of Dow Jones, the latest value. Okay. So go ahead and check this out. Next, I want you to search for the constituents of the index, meaning I want to see what are the companies that are in the Nifty 50 index. To do that, I will go here and I will say companies in Nifty 50. Okay. You can click on any of these links. I will click on this. It takes me to this website. All right. And you can see that we have, let me zoom in. Okay. So we have Reliance Industries, HDFC Bank, Bharati Airtel, TCS, ICICI Bank, and other companies in the Nifty 50 index. Okay, so there are 50 companies in Nifty 50. All right. Now let me go back and let me here say Sensex. Okay, companies in Sensex, and I will go to this website, and here you can see that there are 30 companies. Okay, 30 companies in Sensex. All right. So this is your exercise for today. Okay. So this is it for this video. I hope you have understood the concept of an index.